Wall Street. Today is Tuesday, February, what is it, 27th? Yeah, 27th, 2024. Currently, it is 9:10 p.m. Eastern Time. We're reporting live from New York City, so welcome back to New York. It is a rainy day, okay? But it's not all bad news for the following reasons. It's actually pretty warm out. Not sure if anybody noticed if you're in New York City or not, but today's pretty warm, and also tomorrow could get up to 60 degrees. The only downside is that it's probably going to be quite windy and rainy almost all day tomorrow too. But at least the temperature is starting to get back to where I personally like it to be. We are almost finished with February. We only have 2 more days left, and then we are into March. So I'm calling it on winter. So winter is officially done from my perspective, and I'm sort of going to will in the spring. That means I'm not wearing any more winter jackets. Okay, I don't care how cold it gets. I'm going to will the spring upon us, my friends. All right, enough of that BS out of the way. Let's get to the markets. Now, we had some encouraging action. One of the things I wanted us to take note of is an interesting trend that not necessarily we predicted here on the live stream, but an emerging trend that we were watching for. And not only watching for, that we were hoping for too. So today the S&P 500 was only up about 8 points. You're starting to see a lot of these mega cap tech stocks start to pull back. And if not pull back, just take a little bit of a pause here. We'll take a look at Apple, ticker symbol AAPL, trading back below its 200-day moving average, which is not good. You don't really want to see that. You don't really want to see a stock trading below its 200-day. But in this case, after we had these such aggressive runs, right, in a lot of these mega cap tech stocks, like your Alphabets, your Nvidias, Apple, Microsoft, in a new bull market, as we've explained, usually what happens is the leaders are out first, and those are going to be your true market leaders for the next cycle. And when you have a normal correction in the market, what you'd like to see in a perfect world, now the world isn't perfect, but in a perfect world, what you want to start to see is profit taking, right, in a lot of those true market leaders that have gone up a ton, right, for lack of a better term. And you want to see them pull back to major moving averages, but you want to see a lot of that cash funneling back into some of the laggards, but more specifically the small caps and the micro caps. So I want to turn your attention to the Russell 2000. So obviously the Russell 2000 is the small cap index in the United States. And if you look at the ETF, the iShares Russell 2000 ETF, the ticker symbol IWM, we were up almost 1.5% today. So really, really good action in small caps. And I'm actually going to take you behind the desk here just to see an interesting visual. Small caps are just starting to break out from this big basing pattern that really started all the way back in April of 2022. Because remember, you know, all of the larger indices, the S&P 500, the NASDAQ, and the Dow Jones Industrial Average, are all up into new all-time record highs. What hasn't really participated in the rally were small caps. And I can show you a visual right here, if I may. So right now you're looking at the Russell 2000, and we've had this massive recovery, right, in the S&P 500 that's dominated by the Magnificent Seven, the NASDAQ 100, which is a very tech-heavy indice, but we haven't really seen participation in small caps. So we're just starting to see, just now, okay, the Russell try to break out of this sort of cup-like base and over this main swing high of 212. Now, again, this is the ETF of the Russell 2000. I think if we can get back above and break back above 212 on the Russell, I mean, this thing is going to be, that's very, very encouraging for the market. So we are almost there above that swing high at 205. And we had very, very good action today in small caps, which is what we want to see, okay? Because, you know, as we've been talking about, usually smaller cap companies in the United States do not tend to perform well when interest rates are elevated. right, or when we're in a higher for longer interest rate environment, mainly because a lot of companies that are small caps in the Russell 2000 are what you can call them zombie companies. So essentially, the way their business models have been able to live on is due to artificially suppressed interest rates. So in debt acquisition in perpetuity, essentially, to help them take on new debt to fund operations and to service their existing debt. But as interest rates have gone up, it's becoming increasingly more difficult for these smaller companies to service their existing debt. And particularly if you look at the portion, and we've talked about this in the newsletter, if you look at the ratio of debt outstanding in the Russell 2000 versus the S&P 500, look at the ratio of, I should say, floating rate debt. Okay, so non-fixed rate debt in the Russell 2000. It's a lot. So it's interesting to see that small caps are now starting to participate. So we'll keep our eye on that trend. So that was the IWM. But let's look at the IWC, which is the microcap index. Microcaps tend to perform even worse in a higher interest rate environment. And microcaps today were up almost 2% on the day. So you're starting to see that sector rotation out of the large caps and getting a little bit of love in the microcaps. So again, you see this truncation here. They have not performed well. So potentially, right, a little bit of a thesis here. Should interest rates come down, which I'm not too sure that they are, we could have that debate, but let's just assume that we do have some rate cuts in 2024. That could actually be a potential catalyst for small caps and for micro caps to put a little bit of reprieve on them. And maybe you could see a little bit of alpha in small caps and micro caps going over the summer. Who knows? Last but not least, we need to check out Bitcoin. I don't care if you guys like it or not, you think it's a scam or whatnot, you still need to pay attention to it because we could use it as a gauge for risk proxy in the market. Bitcoin is trading at 56,700 or 56,800. We are not too far off of new all-time record highs in Bitcoin. Again, it's very important that we pay attention to this. Also, Ethereum is back above 3,000 for the first time in over a year. This is signaling risk on in the market. This is not risk off action here. When you have Bitcoin move from 16,000 in November all the way to 57,000 now in February, that's risk on action. Okay, whether you like it or not, that's risk on. That's all I got. So everybody, I'm gonna go ahead and close up shop here. I'm gonna say hello to everybody in the chat and thank you all for coming out to Walk Some Wall Street tonight. Last quick announcement, okay? We will be sending out our Behind the Street newsletter on Thursday. It's gonna be action-packed. There's gonna be so much that's covered, not only in the United States, but we're gonna cover emerging markets in a major, major way. So if you wanna receive that on Thursday, okay, right as the market closes, just scan the QR code on your screen and punch in your email and you'll be signed up to our Substack. This is what it looks like. This was the last newsletter that we sent out last Thursday, where we talked about a potential sector rotation into smaller caps and micro caps, which is actually what we're seeing right now, and a rotation out of the larger cap stocks. We also talked about the Dow transports that hit a new all-time record high, what that means for Dow theory and the like. So yeah, join us over there at the Behind the Street newsletter. And let's get started. Thank you all for joining. All right, everybody, I did bring the umbrella. So let's see if we'll need it. It's raining quite hard here in New York. And let's see who we have in the chat. I see FredX, what's going on? Marie, Sharon is here, Michelle K. Let's get rid of that guy. Jimmy, what's going on? Gadot, thanks so much for joining us. Davo Zip says, what's up, Tom, from the Gold Coast? Good to see you. Daryl Williams, Justin, Frank, thanks so much for joining us. Mock, Donna, JC, DC322, Michelle K, and all of our moderators. Welcome. to New York City. We are starting off the live stream on East 56th Street and Madison Avenue. You can see this pretty unique view of 432 Park. Now it's so cloudy and rainy in the city that you almost can't even see the top of 432 Park, which is quite incredible. Now I've heard stories of people who have units on some of the top floors, tower, that it could be a cloudy day right on the ground here in New York City, but their apartments are so high up that depending on the, where the clouds settle, it could be sunny where they are in their apartment. It's kind of crazy, right? So it could be totally cloud cover and overcast on the ground floor here in New York City, but if you're kind of above the clouds, you could actually see the sun. I mean, that would be just so strange to live like that, and pretty cool too. East 56th Street, Madison. What's up, everybody? Daryl is here, Steph UF. Thanks so much. Ozzy, this is Tom. I'm enjoying these nightly New York City streams. Thank you so much for being here. I'm glad you're enjoying it. Football Life says, what's up, everybody? Good to see you. And UniJ23. Now we have some notable corporate earnings coming up throughout the week. I think that's quite obvious. We've covered that at length. I believe the number one company that I'm really looking forward to reporting is Salesforce. So we're going to be doing a deep dive into the earnings of Salesforce. The ticker symbol is CRM. It'd be interesting to see how that company reports, specifically after all of this activist investing that has been going on. Really trying to push the company to, turn itself around and, focus on the bottom line, focusing on increasing gross margins. And it seems to have worked. We're only trading just a few points, I should say all but a few points away from new all-time record highs on Salesforce. So I think if we get a good, beat and raise earnings report, we talk about that terminology a lot, the term beat and raise. Essentially, just as a quick review, I know we do a lot of new people here. When I talk about an earnings report being beat and raise, it essentially means Wall Street analysts or analysts on Wall Street will often make projections or predictions on what they think a company is going to report, right? So let's say if Wall Street predicts, because that's really all they're doing is they're predicting. Salesforce will earn $5 worth of EPS. These are just made up numbers. With $20 billion in revenue. And if Salesforce then in turn comes out and posts, $5.25 of EPS on, $35 billion in revenue, that would mean they would have beaten on both the top and the bottom line. In addition, if they beat, and then they said, you know what, our outlook for the economy and our outlook from our customers is so good, we're actually going to then raise our forward guidance. So if they guided, let's say $10 in earnings for the full fiscal year, but things are looking so good that they're raising that guidance, that would be considered a beat and raise quarter. And studies show, if you could sit in a stock, right, that has 6 consecutive beat and raise quarters, it'll go up over 200%, right? Nvidia just had a big beat and raise quarter, and this kind of really brings us back to the fundamentals, right? What drives the stock price higher? Well, yeah, it's the liquidity, right? You need the liquidity there, but you also need the earnings. If the stock doesn't have any earnings power, nobody's going to buy the stock. And if you understand Dow theory and you've read into Richard Wyckoff, like Wyckoff theory, the market is dictated by the composite operators, right? And a composite operator essentially just means institutional investors. So you could have the major investment banks that are investing client money. You could have proprietary trading, right? Proprietary trading just means the investment banks are investing their own money, the firm's money. Then you could have family offices, just large institutions. Those are the ones that are pushing the prices of stocks up, and they're only going to buy stocks of the highest quality, right? Companies that are compounding out their earnings, have very, very wide moats, have great products or services. So it's important to focus on the earnings. And, you know, I always say to work backwards. Chances are if a stock has gone up, you know, everybody's saying, whoa, that stock went up so much. You know, work backwards. There's usually a reason why. It's usually the earnings power is so strong that everybody wants in the name. Derek Dulce, what's going on? Thanks for joining us. We're reporting live from Madison Avenue. Jerry, what's going on? Thank you so much for being here. Todded Tara. Oh, wow. Very cool. Thank you so much. Lockshot. Appreciate you very much. Very kind of you. Hey, Hawaii, what is going on? I think we need to make Hawaii a moderator. EV, what's up? Chris B, Storm Rider, thanks for joining us. Now, speaking of institutions, everybody, this is the corner of East 53rd Street and Madison. This is one of my favorite buildings, honestly, in the city. It is the headquarters of Jefferies. If I stand over on the corner here, you can see it a little bit better. I really, really like the building. So you can see Jefferies right here. This is the corner of Madison Avenue and East 53rd Street. I like how the base of the building is so big and then it kind of tapers off at the top. It's pretty cool. Really, really like it. The sky kind of looks a little bit ominous with all the rain clouds. Now, this is a cool shot of 53 West 53rd Street. That's one of the buildings on New York City's Billionaires Row, even though it's technically not on 57th Street. I like to define it as a Billionaires Row-esque style building. 3 grams, what's going on? Mr. 007, thanks so much for joining us. Family Glow, so just joined in, had to watch a lot of Storm Chasers. Speaking of chasing, it looks like the NYPD is chasing after somebody right now. Hopefully everybody's all right with that. I don't know what's going on over there. It appears the NYPD is headed towards Times Square. There's always something going on over there. My friend sent me a couple articles. Over the past 3 weeks, there's been, I think, 4 separate incidents, you know, major incidents that have been happening in Times Square. Truthy says howdy. What's going on? Thanks so much for joining us. Palmer says good evening, chat. Now, what's up? What is everybody's thoughts? What is everybody's feelings about the inflation print that we're going to get out on Thursday? So a lot of people are talking about interest rates, and if you guys want to see, my boss was actually on Fox Business today. I'm not sure if you guys saw that. I forgot to drop the link in the Nightbot. As always, I knew, like, I stepped out of the office and I'm like, I feel like I need to do something. I feel like I'm forgetting something. And I just remembered what I forgot to do. That's all right. So my boss was on Fox Business this morning and she was talking about interest rates, right? Because that's pretty much the talk of the town right now. Everybody wants to know, you know, when interest rates will come down, or if they should, or when. And I think that, you know, we should be reframing that question a little bit. I think the populace, and you could watch the interview, my boss kind of explained it really well, and I think I concur. I believe I agree. I think we need a little bit of a reframe on the interest rate environment, right? Oh, hold on 1 second. Now, the reframe would be the following. I believe everybody is so hooked and has gotten so used to these artificially suppressed interest rates, right? That anytime we have a hiking cycle, the only question anybody asks is, when are interest rates going to come down? I don't really think that should be the question, right? I think we need to adjust to a period and a time to kind of get back to reality. people always ask the question, interest rates are so high, this is not normal. Well, I would respectfully disagree. I think that what wasn't normal is the, decade plus of artificially suppressed rates. That's kind of not normal behavior. So if anything, we are technically, but if you look at, the Fed funds rate over time throughout history, we are actually starting to get back to normal rate normalization here. So, and I think that's actually really good and encouraging for the economy, because you have unemployment still near all-time record lows. Okay, these are the facts. You have the equity markets, particularly in the US, at all-time record highs, such as the S&P 500, the NASDAQ, and the Dow. You now have small cap companies like the Russell 2000 and also micro caps starting to participate. So to me, this is the market telling us that we don't necessarily need to cut rates and live in this environment of, negative real rates, right? Because there's a difference. There's a difference between nominal rates and real rates. We'll talk about that in a minute. The market just wants stability. So we've discussed this yesterday, and I believe that if the Federal Reserve just sits on its hands and says, look, we're looking at all of the economic data. The last CPI report came in a little bit hotter than expected. Remember, many economists that were polled thought inflation was going to come in below 3%, right? At 2.9% specifically is what they thought. We came in at 3.1. So inflation is a little bit sticky. Okay, it's not egregious inflation, but I think it's unacceptable in everybody's eyes. And the economy is operating okay. So if we can just adjust to a higher for longer environment, businesses are adaptable, people are adaptable. And I don't think we need to be premature in dropping rates. That's kind of my thought process there. Any thoughts on the chat's end? Agree, disagree? I'm more interested in what you guys think, actually. Hey, Julian's, it's beautiful night. Greetings from me. Good to see you. Thank you, Tom, for opening a window and letting us watch. Thank you so much. LB says, do you think we will have a market crash around March 11th? I don't even know what that means, really, to be honest. Jimmy B says, I remember the 80s when mortgage rates were 16%. Yeah, I mean, deals got done then in the 80s, but now I understand, right? Valuations were a lot different back then, right? Which I totally get. I'm not being dismissive of that, because I know everybody, that's sitting on your couch, you're like, wait, but a starter home wasn't $500,000 in the 80s. I understand that. I totally understand that. However, it's only going to get more expensive should you have the Fed just drop rates down to zero again, right? Because I have a theory, and the theory is called access to liquidity. It's not like an actual theory, it's just me peddling some thoughts around in my mind. So, this isn't some like professional theory. But if you track the accessibility to the cheap money, it always goes into the hands of a very, very select few people that are very well capitalized, either institutional players, high net worth individuals, family offices, and the like. And that causes really runaway asset prices, because, smart money could borrow money for free, essentially, to acquire assets. And very, very seldom does the little guy, who's making maybe 50, 60,000 a year, working a 9 to 5, very, very seldom do they get access to that kind of liquidity and deal flow, right? Banks want to lend to people who are very well capitalized. That's kind of the point. So I think we just need to let the free market do its thing. I think we just need to let the free market work. We'll see. Justin, what's going on? NAV 407 says, what happens if the government shuts down at the end of the month? I don't think the government's going to shut down at the end of the month. What do you think? Do you think the government's going to shut down at the end of the month? Gerat says, I agree, no rush, steady as she goes. Being time for the summer boom. DC says, I believe the massive exodus / migration from Cali drove a large percentage of the market. Ozzy says, people aren't adapting, Tom. If they were, consumer debt wouldn't be at all-time highs like they are. More people are using credit cards just to make ends meet. It's actually a really good point. I think that's actually a really good point of discussion there. So who was that said that? So I'm just trying to navigate the chat here. Ozzy, yeah. So Ozzy actually makes a really good point, and I think it's important that, kind of feel out all parts of the argument. It's true. According to the Federal Reserve, consumer debt, like household debt, has reached a new all-time record high. Look at this, that's sort of like a lake here when you're trying to cross Park Avenue. And we've actually been seeing an interesting trend. And we've covered this particularly at the very, very beginning of earnings season. Because at the very beginning of earnings season, who tends to report earnings? It's all of the major financials and the credit card issuers. And one of the concerning things that we're seeing, right? I wouldn't say it's like Armageddon, but it's a concern and we need to keep an eye on it. We're starting to see delinquency rates trend towards pre-pandemic levels, right? We're using Q4 of 2019 as a benchmark, if we may, right? So if you go to JP Morgan Chase Investor Relations page, you can actually download the earnings deck, okay? And I would advise everybody to do that. Then you can go to Bank of America's Investor Relations page and download the deck that they use to present earnings. And do the same thing for Discover Financial, Capital One and the like. Well, actually, Discover and Capital One may be the same thing now. But you can see these clear trends that you're having two things happen at once. You're having debt balances grow in consumer debt, but you're also having, delinquencies tick up towards pre-pandemic trend. Now, it's not like anything super concerning yet, but it's important to watch that trend for sure. Hey, Brad's brain. What's going on, Brad? Well, speaking of banking, speaking of JP Morgan Chase, we are now standing at the construction site of 270 Park Avenue. This is going to be the brand new Class A office tower for JP Morgan Chase. This is Jamie Dimon's brand new office right here. I'm extremely, extremely excited for this building. I'm really extremely excited for Park Avenue in general. Everyone's trying to navigate the puddle here. Hey, Robbie says, hey, Tom and everybody. What's up, Robbie? Good to see you. Hey, Leonam Joseph, happy birthday to you. Thanks so much for watching. Please enjoy your night. Happy birthday. Stein says, hey Tom, looks yucky out there. It is. Although I'm not complaining because it's actually quite warm. It's going to be 60 degrees tomorrow in Manhattan. It's pretty nice. Vincent says, if you carry a balance on your credit card, you are getting hammered with the high interest rates. Vincent also makes another good point, which is very concerning, right? Does anybody want to do a quick Google search of what the average APY is on a credit card right now? I think it's over 20%. And as interest rates have gone up, wow, now you guys, you can't even see 432 Park anymore. That's crazy. It's so cloudy, we can't even see 432 Park. The entire, I would say the top third portion of the building is completely covered in clouds. I'm Imagine living up there and like not being able to see anything. You're just living inside a cloud. I can't really even comprehend that, to be honest. Anyway, but yeah, it's a good point. So at the same time that credit card balances in the United States have approached all-time record highs, we are in the highest interest rate environment we've been in about 30 years. So that interest tends to accrue pretty fast. So it's kind of like a double whammy. I mean, I guess it's good for the banks, right? I mean, they're making money off of us, but it's a really good point. Hey, Abdullah, what's up? Good to see you. Hey, John says there is no mass exodus from Cali. More demand for buying here than you can imagine. I work for Douglas Elliman. Can't trust what you hear on the news. Especially, oh, lost your comment. Especially the one that settled for almost $1 billion. Yeah, and you know, California, I'm very, very interested in San Francisco. I think it's the absolute bottom of the market in San Francisco, California. Not financial advice, but if you look at the market in San Fran, particularly on the residential side, I mean, it's a fire sale. They're pretty much giving these properties away. And you know, I spent about a decade in tech and telecom sales, and I know a lot of founders. I know a lot of people who still work in and around the Silicon Valley area, and the talent pool is as robust as it's ever been in San Francisco. So the narrative, and I get the crime, right? I'm not sort of downplaying the crime. That's not what I'm doing. I'm talking about the talent pool and where business creation is. So I would actually say San Francisco is a pretty good buy right now, because assuming the politics of everything change, and I think it will, once we bring back law and order, could you imagine the repricing? So again, fear, uncertainty, and doubt oftentimes leads to mispricings in the marketplace. And when you have mispricings in the market, right, that creates an area of opportunity. And right now, I am very interested in San Francisco. You want to have I mean, the negative sentiment is so extreme, and maybe it's warranted, right? I'm not downplaying the crime, but usually when you have so many people on one side of the trade, you create mispricings in a market. And you kind of have the same thing here in New York City, the exact same thing in New York City in terms of the commercial real estate market, right? That is going to create so many mispricings in the market and amazing opportunities for investors, particularly in a lot of these Class B office towers that are going to go into foreclosure auction. You're going to be able to pick up some amazing properties right here in New York City at fire sale prices. I'll give you an example. We talked about 5 East 59th Street. That was the old Playboy Club. You can look it up. It had about $85 million worth of bad debt on the property. It went into foreclosure auction, and we actually bid on that deal, by the way. We were a bidder on the deal. We were in there. We lost the deal, but it sold for, I believe, $23 million. And that is just an unbelievable piece of real estate. You're right next to the Sherry Netherland Hotel. You're adjacent to the Plaza Hotel, Central Park South. I mean, guys, again, it's a scary time, right? But you're sort of resetting the business cycle here. It's true that there's going to be a wave of commercial debt that needs to be refinanced at much higher rates. I think much of that will get sorted out and worked out, and some operators will be able to do that, maybe throw more equity into the deal. Because that means well-capitalized investors, entrepreneurs that are able to take risk in the marketplace, can get these properties for cheap and give us new product. Because why is New York City real estate, and we're talking about the residential sector now, why is it so expensive? Because we don't really have that much housing. We don't really have that much inventory. So we need developers to come in here, right, put their capital to work and build inventory. You know, we've been in an affordability crisis, not to ramble on, I'll shut up in a minute. But we've been in an affordability crisis in New York City in terms of the residential side for a long time, even before we had this migrant crisis of 172,000 people, okay? So even before the massive crisis that everybody talks about in terms of the migrants, right? It was already bad. So what do you think it is now? So the solution is new product, the solution is building, the solution is building places where people can live. So I tend to be very optimistic about this, right? When times are dark and it seems like the sky is falling, you kind of got to dig your heels into the sand here a little bit and say, look, let's stop complaining, let's stop bitching about everything, and let's try to be solutions focused, okay? You know, let's wipe our tears from under our eyes, you know, and get to work and try to come up with creative solutions to make the city a better place for people. So. Guys, this is the Yale Club here. Look at that. Hey, Daryl, what's up? Good to see you, Daryl. Thanks so much for joining. Paul Tricky says every inch of NYC is counted for. You'd be surprised. Pineapple water. What's going on? Madison 32 says, Tom, San Francisco, California has appointed Kelly Wong, a foreign national with no legal voting rights in the United States, to oversee how its elections are administered. More crime. I didn't know that. Yeah, I'm not too in tune with the San Francisco politics. Interesting. Oh, Krog Dog, is that right? We're right in front of your building? Is that what you said? Let me see. Come on. Wow, you have a pretty nice building. I'd like to be at the Yale Club too. All right, maybe we'll duck into Grand Central Station here for a moment, guys, because it is quite windy and it's starting to rain now. Hey, Dan H, what's going on? This is any other recommendations in Florida? Like, are you talking about for like a place to live or things like that? I don't know, it depends on what you like. Like, what's your lifestyle? Do you like golf? Do you like to be at the beach? What do you like? What are your interests? For me, I prefer being right on the water. I like to be on the beach. I have to be at least 2 miles away from the water. I love the ocean. But some people are okay with being in, you know, Central Florida, or maybe even on the Gulf, right, in the coast. You know, next to a lot of golf, things like that. So, it really depends. So we have now reached the very base of One Vanderbilt. Check this out. Now, this is probably one of the most impressive buildings in New York City. Look at this. Hey, D. Taylor says convert more office space to residential. Yeah, I mean, a lot of these developers are trying. Now, if you look at where a lot of these, I would say, office to condo conversions are happening, a lot of it's actually happening in Lower Manhattan. If you look at the commercial vacancy rates or occupancy, I think for commercial real estate like office space, it's only 14% occupancy down there. There's a lot of vacancy. And that has been, you know, spurred by many, many things, right? If you think about the financial district in Lower Manhattan, you don't really need to be on Wall Street anymore due to the internet, right? I always kind of get a laugh in. We were actually just walking down Wall Street, not on the physical street of Wall Street, but where there's a very high concentration of finance, which is really Park Avenue. You have a lot of the hedge funds, a lot of the investment banks, and you also have a lot of investment banks in Times Square. A lot of them have moved uptown. I would say the most notable investment bank that has moved from Wall Street is Deutsche Bank. So they used to be at 80, I think 80 Wall Street, and now they've moved up to 59th Street, Columbus Circle. Deutsche Bank. And the only problem with a lot of these condo, I would say office to condo conversions, is oftentimes they can be very, very expensive, extremely costly, and the buildings really weren't optimized for people to live in. So the floor plates are weird, the plumbing isn't, it's just very difficult. It's not as easy as it sounds. However, I want you to check out this interesting building. It's a really interesting project. However, it's not selling too well, but I want you to look into it. The building is called One Wall Street. Okay, One Wall Street. It is directly across the street from Trinity Church, and that is New York City's largest, okay, I'll repeat that, New York City's largest office to condo conversion project. And it was put on by Harry Macklow. And Harry Macklow is arguably one of the most iconic New York City real estate developers. He's the one who put on the 432 Park Avenue project, which is an architectural marvel on Billionaires Row. I would list Harry Macklow up there with Gary Burnett of Extel. You know, they did 157 as well as Central Park Tower. So yeah, that's a huge condo conversion project, but it's only about 20% sold, and there's 580 units in the building, right? So it's a lot of units. It's a lot of units. All right, this is the Grand Hyatt Hotel. I think this is actually going to come down soon, is it not? I believe there's plans for a new tower to go right in the place of the Hyatt at Grand Central, I think. And a lot of people were upset about it because they didn't want the, what's it called? The views of the iconic Chrysler building to be blocked. Hey, Nakos, good to see you. G. Raymond says conversion to residential involves a massive investment in terms of plumbing. Commercial built with a hub of toilets and kitchens, whereas residential needs plumbing throughout each floor. Yeah, it's a heavy lift. I mean, you're totally spot on. I think what'll happen, and this is coming from someone much, much smarter and more experienced than I am, notable developer here in the city, says that what's more than likely going to happen with a lot of the vacant office space in Manhattan is the buildings will probably be sold for probably under land value. And once the demo costs come down a little bit, the buildings will probably just be demolished, and in its place they'll just build something new, most likely on the residential side. So I mean, it's not all bad news, right? It's, you know, we're in a new time in history. We're in a new time in life. You know, we don't need all of this office space anymore. We just need residential. We need places for people to live. And, you know, if we could have these buildings come down and then just build brand new product, I think that's very good. But it's not going to happen overnight. This could take a decade to play out, right? So, but I'm optimistic about it. Hey, Joe. Let me read Joe's comment here. Joe says, Tom, my civil friend told me that sometimes the conversion can compromise the structural integrity of the building due to the weight of all the new plumbings and staff. Wow. Oh, plumbing and stuff. Interesting. I never thought about that. It's kind of crazy. So, I mean, engineering is really a work of art. Speaking of an amazing piece of engineering, you're looking at the Chrysler building. This is one of my favorite buildings in the entire city. Beautiful Art Deco building that sits right here on Lexington Avenue. This is 405 Lexington. Beautiful, beautiful shot of the Chrysler building. It's awesome. Hey, John is here. What's up, John? Hang with Mark Mom. What's going on? Thanks so much for joining us. Tariq Khan says, I wonder how many people will start to live within their office buildings. So you guys are going to kind of get a little bit of a kick out of this one. I'm sure everybody's familiar with Adam Neumann, right? So Adam Neumann is, well, the creator of WeWork. WeWork is now bankrupt. But Adam Neumann had this whole vision of, you know, co-working spaces. I just think his idea was a little bit too early. I think his idea works really well now. But he's actually launching a new startup of something similar, where I believe what it is co-working spaces, but there's also residential units within the building. So like people physically living where they work. I think Google does this too. I'm not sure if anybody's familiar with a lot of the big Google campuses out in California. I believe there's on-premise residential housing for some of the workers. I don't know. What do you guys think about that idea? A little bit too weird for me. And again, I don't want to be like a pessimist about it, but I don't know if I'd want to like live, like I don't know if I'd want to go to the second floor of the building, go to work, see all my coworkers, and then head to the 50th floor of the building and go home. I kind of want my privacy a little bit. I mean, I love my coworkers, but I don't know if I want to see them like every day. Like what if it's the weekend, you're coming down the elevator, you're just trying to hang out by yourself, and then you see your boss. I don't know. Thoughts there? This is the $1.50 slice pizzeria here. But yeah, it's Adam Neumann's new company. And I believe they just got a major investment from a venture capital firm, Andreessen Horowitz, who is obviously founded by Mark Andreessen. It's interesting to have these conversations because you never know what's going to happen. We can only speculate. And there's all these different ideas like, you know, can we convert the office buildings? But then it's like, oh, you know, well, the plumbing is too heavy. I mean, it's interesting to see how the city is going to evolve over the years. All right, everybody, this is East 43rd Street and 3rd Avenue. I believe we're coming close to Sparks Steakhouse, actually. Hey, Quants says, I agree. Hell no, I want to keep, yeah, you want to keep your space from the coworkers. And it doesn't mean we don't like our coworkers. It just means like it's a little bit too much, right? A little bit too much. Anyway, all right, let's check out the east side of Manhattan. Maybe we'll actually have enough time to go over towards the UN. We very seldom walk all the way over to the east side. But since I think it's raining tonight, we'll kind of just stay around the office. Hey, Davi, what's going on? Hope you're well over there in Brazil. Thanks for joining us. We're talking a lot of commercial real estate tonight. We're talking residential real estate. We're talking where are there mispricings in the marketplace? Where do we see opportunity, right? The vast majority, or I should say arguably the majority of the money in real estate is made at the buy, right? So you want to buy at good prices. And, you know, fear, uncertainty, and doubt can create those mispricings. And I think personally, I see a lot of that mispricing happening in San Francisco, California. Yeah, the crime is raging, but you know, a lot of that residential real estate is getting let go 15-20% discounts. Imagine, okay, for a moment, imagine, not to sound like a broken record, many of you send me emails, Tom, you got to stop talking your own book on San Francisco. I don't have any exposure to San Francisco real estate. I don't own any property there. I only own property in the state of Florida. So let that be known. So I'm not talking my own book. Maybe in a few months I'll be talking my own book if I buy something there. But what's very important for me when I'm looking at buying real estate is I want to look at the educational institutions that support that community, and the job growth, the startup culture, right? And in the San Francisco Bay Area, it is still very robust. And I know this because a lot of my friends work there. A lot of my friends are founders. And yes, it's true that you see in the news and on the media that if you park your car on the side of the road, it's going to get broken into. That's true. But still, people are choosing to go there. And you know, if you look at the, also, not to ramble on, you need to look at the venture funding. So VC funding, where is a lot of this VC money going? The lion's share of it's still going to companies in the Bay Area, most of it actually. And that's in the face of a lot of movement to South Florida. But you still see very, very little of that VC money going to places like Miami, Austin. It's growing, right? The number is growing, but it's still not San Francisco. So with the way the valuations are in Miami, you're kind of buying the top of the market. You're kind of buying top tick. So if you're looking to get a wedge deal or something, I mean, you know, assuming the political environment gets better, those prices are going to reprice fast, I think. So I'm always trying to look for mispricings. I think there's some mispricings in New York City. I think there's mispricings right on Sutton Place. You know, that neighborhood's falling out of fashion. So I don't know. I guess I'll ask the chat. So everybody in here, regardless of where you're from, what are you kind of seeing in your market? Now, it doesn't have to be real estate. It could be even in stocks. Are you seeing any area where you're seeing a mispricing that could potentially, we could maybe take advantage of that, exploit that? You know, what is the market not seeing that some of you all are seeing out there right now? Yeah, Jonathan from Florida says, I love my coworkers, but we are hundreds of miles apart. We all work from home. That's so funny. Yeah, Jimmy B says, when we clean up San Francisco, it will skyrocket. I mean, could you imagine? I mean, imagine when New York City, you know, cleans up really, really well. It's going to skyrocket. I think that's why, you know, specific neighborhoods in Brooklyn have been doing extraordinarily well. You know, some parts of Brooklyn are white hot. I mean, the project that we're on right now in Red Hook, Brooklyn, you know, we just put another deal in contract. So I think, you know, places like Red Hook, Brooklyn, that's very clean out there. You're even seeing things fly off the shelves in, you know, like Prospect, near Prospect Park, like on the outskirts of there, Park Slope. Even downtown Brooklyn, some of the new development there. Cheese Puffs is, insofar as San Francisco real estate is concerned, it is overvalued. Maybe. Diana, thank you so much for your generous $10 donation. Says, I enjoy your stream so much. Thank you, Diana. I'm glad you're enjoying it. This is a pretty cool show. Yeah, it's Sweet Baby Jesus, Williamsburg. I mean, look at how Williamsburg, Brooklyn has exploded just over the last 15 years. It's almost unrecognizable. It's insane. This is a cool shot. This is the Pix 11 New York news station and the Chrysler Building in one shot. Kind of cool. Now, I remember, is anybody familiar with Fort Greene, Brooklyn? So Fort Greene, Brooklyn, I remember very, very vividly as a kid, no, not as a kid, like as a young teen, getting off the train at Atlantic Terminal, Brooklyn, right, and walking all the way up through Fort Greene to the Brooklyn Navy Yard, right, because that's where my dad used to work. He was an operator at a power plant there. And that was not a nice neighborhood. You know, I mean, it wasn't like super dangerous, okay? It wasn't like super dangerous by any event. But Fort Greene wasn't like the prettiest, right? It was a little rough around the edges. I mean, go to Fort Greene, Brooklyn now. Go in and around the Brooklyn Navy Yard now. I mean, guys, there's a freaking Wegmans in the Brooklyn Navy Yard, okay? It's really nice over there. It's just crazy how Brooklyn has changed. You know, in downtown Brooklyn, you have the Brooklyn Tower, that huge skyscraper that looks like that thing out of the Lord of the Rings. I mean, it's so wild how fast things can change. Lizzie Hatch is telling people moved from San Francisco to Sacramento to buy houses. Liz, I was reading a crazy article today, and again, I'm not super well versed in Cali, but I was reading an article in the Wall Street Journal. You guys feel free to look this up and kind of follow along as we're talking. And it was talking about Nvidia specifically, and since Nvidia's stock has gone up so much, I mean, think about being an employee there. If you have equity in the company, like employee stock purchase program, Nvidia has minted its employees multi-millionaires, you know, sometimes deca-millionaires. Employees of Nvidia are, right? Not all, but a lot. And they're saying the homes and the real estate valuations in and around Nvidia's headquarters in California, like the market is white hot because the valuation of the stock has gone up so much, where, you know, it's like bidding wars in and around Nvidia's headquarters. Did anybody see that? It was a wild article today in the Journal. You guys are gonna love this view. Look at this. So we're looking directly down New York City's 42nd Street, where you see all those big bright lights in the distance. That's Times Square. So we're all the way on the east side, pretty much right by the East River, and we have a straight shot. We have a straight shot all the way down to Times Square. And you can see the spire, the Chrysler Building. Melissa 2087 says love Wegmans. Same. Simon Thomas, hell no. This I expect to pay no more than $1 million for 2,000 square place, relatively near New York. $1 million for 2,000 square feet in Manhattan? I don't know about that. Sweet baby Jesus says, oh nice, I was born in Williamsburg. I got to live next to the L train all my life. I was there for the crack era. I loved it. Nobody bothered nobody. In my neighborhood, my rent was $800. So you liked all the crack? Am I reading that right? I was there for the crack era and I loved it. Okay. Interesting. Huh, okay. I respect it. I respect the opinion. All right, guys, let's head down. Let's check out the UN. And we'll check out the Trump Towers down here too. Now we're overlooking Long Island City. Now, speaking of another neighborhood that has gone skyward in terms of prices, oh my God, has Long Island City really gone up like crazy? It's really, I think a good friend Dan Sang, Dan is one of our moderators here, he was sort of telling us about, you know, how before the pandemic, right before COVID, he had a really nice place in Long Island City. And, you know, once the pandemic hit, and we started to kind of have that recovery, a lot of people started to move out of the city of Manhattan. And Long Island City has become a boom town. I mean, look at all the new development. Look at all of the new, I would say, luxury condominiums that have gone up there. I mean, it's just totally changed in Long Island City in a really big way too. Nako says, what is the best bagel in New York City? I'd say Leo's Bagels all the way down in Lower Manhattan. I really like that. It's by Hanover Square. Now, when I used to work, and I've said this a million times, but we do have some new people here. My old office, okay, way back in the heyday, I was right at 82 Wall Street. So I had one office at 82 Wall, And then 77 Water Street. This was the corporate headquarters for AT&T. It was one of the headquarters for AT&T, 77 Water Street. And I would always go to Leo's Bagels right at Hanover Square. And I was just down there the other day, and they've totally remodeled the location and they've expanded it. It used to be this little hole in the wall place down there, but they did a really good job. It was a total gut renovation. Let's go down the stairs here. Hopefully I won't break my back going down. So we'll be careful. But yeah, check it out. If you're ever in Lower Manhattan, if you're walking around Wall Street, check out Leo's Bagels. Fantastic. However, if you're in Midtown Manhattan, I would check out Liberty Bagel. They have 2 locations, one of which is on 35th Street. Once again, it's called Liberty Bagel. One of them is on 35th Street, and then one of them is quite literally right next to my office. 58th Street, right across the street from the GM building and the Apple Store. Really good bagels. Hey, Jonathan from Florida, thank you so much for your very kind $20 donation. This is Tom, thanks for all the great walks and amazing views. Not a problem, glad you're enjoying it. I'm glad we're over at the east side tonight because we've been spending too much time in Midtown, I think. So I'm happy to get you guys over here for a little change of scenery. All right, what do you guys think? Actually, I shouldn't ask that, but this is the UN right here, my friends. We're gonna cross the street. We'll be able to see the United Nations. And then we'll go all the way up and we'll see the Trump Towers, the residential towers, I should say. And then we'll head back in. So this is East 43rd Street. Since we have the light, we'll cross now. Even though we have the light, I still look both ways because of the food delivery bicycle people. Sometimes they go flying in and out here. Now, oftentimes we start to buffer on the live stream here, but this is the front gates of the UN. Justin says, what do you put on your bagel? So I get something kind of weird, and I don't think you guys are gonna like the order, but if you're visiting New York, you gotta promise me you'll try it, okay? If you're in New York City, you gotta try a bacon, egg, and cheese with Swiss cheese on a cinnamon raisin bagel. I know it sounds disgusting, but just you gotta let me take you by the hand and I'll take you up to the heavens. You gotta put your full faith and trust in me. Try it, very good. So, bacon, egg, and cheese with Swiss cheese on a cinnamon raisin bagel, very good. That's usually my order. But I don't really get bagels that much anymore. I don't really eat that stuff too much. But maybe I'll get it tomorrow now that I'm thinking about it. All right, let's take a look at the UN. When I'm over here, I think about all of the interesting conversations that have taken place here, right? I know Hawaii's like, you lost me at cinnamon raisin bagel. Just try it. Just like try to have some willpower to get to order it. I think you'll be pleasantly surprised. But I mean, guys, chat. Imagine all of the crazy conversations that have happened over the years of world leaders, presidents, I mean, generals that have happened right here on this street that we're walking right now. It's an incredible thing to think about. The world's most powerful leaders are oftentimes right in this building, talking about all types of things. What is this building? Can't really see. United States mission to the United Nations building. It's so quiet over here. It's kind of like eerie almost. There's no pedestrian traffic at all. Here you have it, United Nations Plaza. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every single day starting at 8:30. Ooh, here we have it, guys. Now, when you see this signal, what do you guys think? Wow, no drones. So I heard if you buy a drone and you actually try to fly it, it's programmed to not take off. So they don't want any filming, except us, obviously. Walks in Wall Street gets a free pass. It's confirmed, it's documented well in the United Nations archives. Very well documented. And this is the Trump Tower right here. I actually showed an apartment in here once. It's quite nice. It gives a similar vibe of 1 Central Park West. Now, 1 Central Park West is the Trump International Hotel and Tower that sits right on pretty much Columbus Circle, right? It's one of the most iconic buildings right there. And the unit seems similar, has a similar layout, similar feel. Very boxy, but big windows. Let me try to wipe the lens. Now this building right here sticking up, this big one, this is Central Park Tower. That's the tallest building on New York City's Billionaires Row. It's 1,550 feet tall, I believe. And it was developed by Extel. All right, let's cross the street and we'll check out the front entrance of the Trump World Tower. Oh, that's cool. Me as Tom, we got to sit in on one of the Security Council meetings there, but it was so long ago, I can't remember who was there. That's kind of a cool experience though, right? So what, you were inside the UN? That's cool. I was never inside the UN. This is a really nice view, looking all the way up to the Upper East Side of Manhattan. Yeah, Hang with Mark Mom says the rooms are beautiful inside Trump Towers. It was initially meant to revive the 90s inflation era economy. Anything to get money flowing again. Yeah, you know, and politics aside, I've stayed at 1 Central Park West before, the Trump Hotel and Tower. It's a remarkable building. It's very, very cool. And again, politics aside, if you stay in that hotel, try to ask for a room with the Central Park view. It doesn't really matter what floor you're on. You could be on the lowest floor of the hotel. The views are amazing if you get a park view because, again, as I've explained, when you're at 1 Central Park West, not only do you have unobstructed views of Central Park, but you could see all of the amazing architectural integrity of every single building on Billionaires Row. So you could see all the greenery of Central Park, but then you see all that crazy architecture of 220 Central Park South, Central Park Tower, 157 Steinway, 111 West 57th Street, 432 Park. You know, it's really a wild experience to be able to, you know, sit in your living room or sit in your kitchen and see all of that. You know, that's why New York City real estate is so expensive, particularly along the park. Hey, Madison 32, thank you so much for your very generous donation as we are outside of the Trump Tower here. This is Tom. Your hard work is appreciated with all the tours and streams in the city. And let's not forget, in Miami, the viewers are priceless, or the views are priceless, and the viewers are priceless too. Thank you, Trump 2024. Thank you so much, Madison. Appreciate you. Appreciate your donation. Yeah, speaking about Miami, for all of those viewers who are new to the stream, we will be exploring Brickell as well as downtown Miami next week. And we do have some breaking news out of Serhant, who we work with the Serhant team quite often. So I work for Kirsten Jordan. If anybody's ever seen the show $1 Million Listing New York, Kirsten is the first female cast member on the show. She's an amazing boss, great person. That's who I work for. But there was some breaking news from Ryan Serhant today. There's going to be an amazing, unbelievable Mercedes-Benz branded building in Brickell. So it seems like a big theme there in Miami of all these luxury car branded buildings. You have the Bentley Tower, you have the Porsche Design Tower, you have the Aston Martin residences, and now you have the Mercedes-Benz branded residences. And I believe there's going to be over 700 units there. It's just going to be a sick property. So who knows? If you continue to watch the stream over the next 3 to 5 years, maybe we'll be streaming from the inside of the Mercedes-Benz building. So awesome job to the Serhant team. That's an awesome deal. I'm excited to see that property come to fruition. I really am. All right, let's start to head a little bit back into Manhattan here. Hold on, I quickly want to see the monthly rates. I'm not sure if you guys can see this. We'll check it. This is actually not too bad. $700 a month. That's actually a pretty good deal, to be honest. Oversized is $900 a month. Exotics, so if you have a sports car, it's going to be about $1,200 a month to park here. Not a bad price, actually. You know, we're actually leading an interesting deal. I've told you guys about this a million times, but we do have some new viewers. We are actually selling individual parking spaces on East 69th Street in Manhattan. So the garage is East 69th and 2nd Avenue. It's a funny story because the garage actually used to be a lot bigger than what it is, but the company who purchased it, Center Park, great guys, really good friends of mine, they had a forced sale to the city via eminent domain. So I'm sure you all know why, right? 2nd Avenue, East 69th Street, 2nd Avenue subway. So the city actually made Center Park sell part of the garage to the city of New York because they needed to build the 2nd Avenue subway. So they got a pretty good payday there, but the remainder of the garage has been converted into individual deeded condo spaces. Kind of crazy. So you're actually able to purchase a parking space. The pricing starts at $175,000 a space. We did have spaces for $140,000, but we've sold all of them. So if you want to be in a private self-park garage on the Upper East Side, you can actually buy a parking space that's a condo. It's deeded to you for $175,000. How's that for the wild world of New York City real estate? All right, let's bang a right here on 2nd Avenue. And if the battery holds up, since we're in the neighborhood, we're actually nowhere near the neighborhood. If the battery holds up, maybe I'll take you guys to the garage and you can see it. Hey, Zozo Bob, what's up? Speaking of Miami, we got Zozo Bob in the chat. Interested to see your thoughts, our good friend Bob, about the new Mercedes building. What are your thoughts on that? I'm sure you're excited. Now, if you guys enjoy all of the New York City real estate talk that we have each and every night, as well as the financial markets talk, go ahead and scan the QR code on your screen and punch in your email, because every other Thursday, right as the market closes, we send out our bi-weekly investing newsletter where we cover the US equity markets, fixed income, everything New York City real estate on the residential and commercial side. It's a great way to stay up to date on the markets and support the stream in a free way. So check us out. We are going to be posting again on Thursday, and we have a lot to cover. We're going to be specifically talking about some interesting trends we're seeing in Japan. The Japanese equity markets hit a new all-time record high for the first time in over 34 years. Potential new golden age in Japan. We'll see. DC322 says, I think when the so-called congestion ripoff thing is implemented, parking will be a premium. Maybe. I mean, it's an interesting thesis, right? Definitely an interesting thesis. The garage is above the congestion zone, so who knows? David says, what does the pizza cost to the left or the right? I don't know. Lavera Pizza, there's another spot that they have on 32nd Street and 3rd Avenue, I believe. I'd say, I don't know, $2.50 for a slice, maybe $3. My favorite slice in the city is Made in New York Pizza. Very good spot. My favorite location is on the Upper West Side of Manhattan. Very good pizza spot. Yeah, Bob's Bitcoin is back up almost 57,000 now. Yeah. Crypto assets are performing very, very, very well. Also, Ethereum is back above 3,000. And again, not to sound like a broken record, but even if you don't necessarily like Bitcoin, you should still pay attention to it, because you could use it as a gauge for risk in the market. You know, chances are, if people are bidding up Bitcoin, that sends a clear signal to the market that investors are risk on. And that is bull market activity, okay? In severe bear markets, you don't have people buying Bitcoin and other crypto coins, okay? It just doesn't happen. If anything, those type of assets get creamed, get crushed. So this is bull market behavior. Very good news, encouraging. Okay, 51st Street and 2nd. We'll go up 2 more blocks and then we'll make a left. We'll just try not to get hit by this BMW first. Hey, hang with Mark Moms, is Tom. Exactly. I look at Bitcoin the same way. Follow the money. Now, another very, very encouraging piece of activity. Oh, let me get this American flag here. Love that shot for whatever reason. That really just caught my eye right there. But another encouraging aspect of this market, and this is something we've been talking about, that we've not necessarily predicted, but we've hoped that it happened, and it looks like it is happening. At the very, very start of a transition period from a bear market to a bull. The first stocks or the first companies out the gate are your true market leaders. They're your market leaders. That's, I would consider stage one of a bull market. Then they get extended, okay, which they are right now. If you look at Nvidia, all of the mega cap tech stocks, they're all extended. They're probably going to correct, and they're starting to kind of take a pause here and correct. And that's actually very bullish action. What you want to see though is money coming out of those names and rotating into smaller caps and micro caps. So today, as we reviewed at the very beginning of the live stream, I want everybody to check out the Russell 2000, okay? You can look at the ETF that tracks the Russell 2000. The ticker symbol is IWM. We were up over 1% today, and we're starting to clear a lot of that resistance. And also the same thing with microcaps. Microcaps, if you look at IWC, we're up about 2% as well. So that's very good, encouraging news that this rally is starting to broaden out a little bit, okay? Increasing in breadth, which is very, very good. Now, does anybody know the significance of this building right here? Let's see. You get a free steak dinner from Del Frisco's on me if anybody can tell me why this building right here has significance. Or what is it known for? Why is it so notable? Anybody know? Hold on, let me get away from this tree so you can see it a little bit better. So again, this building right here, why is it notable? Does anybody know? Hey, Elliott Wave Review, what's up? Yeah, 456, you nailed it, Madoff. So that is the lipstick building. That is Bernie Madoff's old building where he ran his Ponzi scheme. It was right there. Kind of wild, right? Now, Hawaii, I still didn't, and you're gonna kill me for this because you've repeatedly recommended this documentary to me. I still didn't get a chance to watch the Bernie Madoff documentary on Netflix. I am gonna get around to doing that. I promise. But whenever I think of Bernie Madoff, it kind of puts things in perspective that it doesn't matter all of the prestige that you have. It doesn't matter all of the, the accolades. You can still dupe people, right? I believe Bernie Madoff was what, chairman of the NASDAQ or something crazy? Something like that. Don't quote me on that, but I believe he was. He was like chairman of the NASDAQ. And he was a very, very well-respected man on Wall Street. And turns out he was running a massive Ponzi-like scheme. Which, I mean, I'm sure everybody knows what a Ponzi scheme is, but essentially, a Ponzi scheme is reliant on the consistent influx of new investors' money to pay off older investors, right? So in many instances, a lot of people make money in Ponzi schemes, but at the end, it always turns out to be the same. It turns out in ashes and tears when the whole thing collapses. That was one of the biggest financial frauds in history. But most recently, which was an even bigger fraud, in my view, is the Sam Bankman-Fried with the cryptocurrency fraud on the FTX. And I believe that Sam, right, who is now in prison, I think he's in prison now, right? Wasn't he convicted? I think he's in prison. Jail, prison, I don't know. But I think he's going to go away for a long time. He was, every single celebrity wouldn't shut up about this guy. He was doing Super Bowl commercials with Larry David. He was paying off Tom Brady. And it just kind of goes to show you that money talks, right? If you pay somebody enough money, they're going to promote your stuff. And not to be, disrespectful or anything, but it was quite obvious and quite apparent that Sam Bankman-Fried was using all of these celebrities as quote-unquote useful idiots in a way, right? Because at the end of the day, Tom Brady is one of the greatest football players of all time, probably the greatest football player we'll ever see in our lifetime. He's not a finance guy. You know, he doesn't really know anything about that. He has people to do that for him. He's just the talking head, right? The problem is a lot of people trust him because a lot of people are fans of him. Same thing with, you know, a person like Kim Kardashian. I think at one point she was promoting some type of crypto coin or something. And the SEC, the Securities and Exchange Commission, is cracking down on a lot of these celebrities who are promoting these cryptocurrency style investments, mainly because you're essentially soliciting securities. And I've mentioned this many, many times, and that's why I've never gotten involved in any of the altcoins, the alternative type coins. I traded them a little bit back in college, but then I realized, I'm like, wait, you know, when you're a 19-year-old kid and you're kind of stupid, you know, you do anything. But then when you kind of wisen up and take some finance classes, you're like, you know, all of these are just unlicensed and unregistered securities. And if you're actively promoting that, you know, you may think that you're just promoting a company, but you are promoting a security. Just because you have cryptocurrency in front of it or coin doesn't declassify it as a security. And you're starting to see a lot of that come to roost right now with the SEC, the chairman, Gary Gensler, really coming after a lot of these Ponzi-like scams in the cryptocurrency world. But not to be confused with Bitcoin, by the way. That's what I think a lot of people get wrong. They confuse Bitcoin with crypto. Bitcoin is its own thing, right? The SEC has already made a ruling way long ago saying Bitcoin is property. Wow, really? Vinny says he's looking at 100 years. Whew. All right, where are we at, guys? Kind of forgot. Oh, we're back on Billionaires Road. This is 57th Street. Hey, Peter, what's up? 2228 says, thank goodness my fortune is in Beanie Babies. That's so funny. I think some of those Beanie Babies are actually worth like an absurd amount of money, right? So we're actually close to Bloomberg's headquarters. So the former mayor of New York City, Michael Bloomberg, obviously is the founder and CEO of Bloomberg. And their offices are right over here. We might as well stop by and take a look at the building. It's a very unique building. Particularly, it looks very nice lit up for the holidays. Now, a Bloomberg terminal can cost upwards of, I think, $2,600 a month. Or, if you go to the New York Public Library, you're able to use the Bloomberg terminals for free. Gord Orr says, Tom, what is the best hotel you've ever stayed at in New York City? That is a great question. That's a really, really good question, and I have the answer for you. The best hotel that I've ever stayed at in New York City is a tie. Well, I gotta pick one. Okay, if I had to pick one, it would be the Park Hyatt Hotel that is inside 157. Now, the hotel is just ridiculously expensive. I think the cheapest room in the hotel is like $1,000. And I don't stay in hotels because I live here. But I have stayed there before, and that hotel is over the top, unbelievable. I have a lot of good friends who work there. I know all the concierge there, very nice. So the Park Hyatt Hotel on Billionaires Row inside 157. So if you look up 157 West 57th Street, that is the first building that kicked off the trend, Billionaires Row. It was completed in 2014 by Extel, so Gary Burnett's company. And inside the residences is a 5-star hotel. So if you purchase a condo in the building, you have access to 24/7, 365 concierge from the hotel. You have access to the restaurant. You have access to the swimming pool. You have access to the aquarium. There's like a 50-foot aquarium in the building. It's insane. There's a library, there's a pool room, there's a cigar room, there's a wine room. It's just crazy, crazy talk. And I recorded a video 2 days ago? I don't know, it's 2 days ago. I gave a full walking tour of every single building on Billionaires Row. Check it out, it's on our channel. And that was the outside. So we did a full walking tour of the outside of every single building on Billionaires Row. We talked about every single developer from Extel to Macalo to, just everything. Grenado Realty Trust, who did 220 Central Park South. We did a total deep dive analysis. We talked about, the price per square foot of each unit, everything. Now, step 2 is to do a tour of the inside of each building. So stay tuned for that. I will get you guys in there in no time. Cheese Puff says, Tom, can you do a walk along Prospect Park? I can. I'm actually have a listing coming up right along Prospect Park. So I plan to list that in April, in the spring. And we'll be definitely doing some walking tours over there. It's a beautiful, beautiful neighborhood. Now, speaking of Billionaires Row, this is 432 Park. One of the most luxurious buildings on the row. No way, Alexander, that's crazy. It says the Lipstick Building is famous now because Bernie Madoff had offices on the 17th floor, and my office is now located right there. No way. Well, look, we could do a series of reframes. It doesn't necessarily need to be negative. So out comes the bad actors, and in comes the good actors with Alexandra, right? That's kind of the reframe. So from here on out, that will be the series of reframes on the Lipstick Building. I also still love a lot of these older pre-war buildings too. Look at that. This is how the whole neighborhood used to look like at one point. Gotta plug in my phone here a minute. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. All right, phone's plugged in, we're good. But the phone is we are now back to Park Avenue. Oh, look at that. You have the US flag and the Korean flag. That's cool. I don't think I've ever seen that before. It's a pretty cool shot. AAF10. So can you please give Aisha a shout out? Thank you so much for watching. Appreciate it. Asia, and welcome to Walks in Wall Street. We're happy to have you here on Park Avenue. Billionaires Row. Big stuff, cool stuff. And thank you for watching. Let's check out one of these Formula One cars here. This is the Aston Martin showroom right on Park Avenue. I believe Formula One Miami is coming up too, according to Hang with Mark Mom. Pretty incredible vehicle, right? Now the marketing is really top-notch, not only by Aston Martin, but also by Ferrari. You have both showrooms right here on Hedgefund Road here. Oh, Sentinel One. Now, I think Sentinel One is a cybersecurity company, isn't it? I think it trades under the ticker symbol S. I know, Hawaii, isn't that cool? Look at this thing. This car probably costs like $1 million. Where does the guy even sit? I'm surprised they could even fit in that thing. Look at how small that opening is. Jeez. But what a strategic placement, right? You have Aston Martin right here. And then right across the street, you have 425 Park Avenue, which is one of the newest Class A office towers in Manhattan. And this is the temporary headquarters of Citadel. So one of the most profitable hedge funds on Wall Street. So as all of the quantitative traders are making boatloads of money, they can look down to the street level and window shop an Aston Martin or a Ferrari. And they could look at 432 Park Avenue and look at their future penthouse. Very strategic marketing, I guess. Holy crap, Alfonso's is an F1 car, cost 15 million bucks. All right, well, I was way off by a factor of 15. Well, cool. Cookings is, I had a recruiter for Citadel talk about their internship. Nice, it's a really good opportunity. I'm positive you'll get it. So this is the main entrance of 432 Park. Pretty cool, right? You can see it all backlit here. Oh, looks like sunshine after rain just arrived home. Took a cab right to 432. An interesting feature about 432 Park is they have the elevator banks all the way in the back. So you actually have to walk through kind of these, it's almost like a privacy screen. So you never see who's going in the elevators. You can never see really any of the resident space. Everything is very, very articulately laid out for privacy. Hey, Raj Rupani, what's up? Good to see you, Raj. Now, it's true, a lot of these units here kind of act as pied-à-terres, if you will. And essentially a pied-à-terre is like a second or third residence. But you'd be surprised. A lot of people spend a lot of time in these apartments on Billionaires Row. Yes, there is a stigma and a narrative that a lot of it is kind of used as a piggy bank in the sky, so to speak. Now, there's an interesting story about one of the penthouses at the top of 432 Park Avenue. It was purchased by a Saudi retail, sort of like an empire, one of the royal families there, and he bought it for, I believe, just under $100 million. And he's putting it back on the market for sale, I think for $20 million less. Now, here's the crazy thing. He has never been in the apartment, not even once. Not even to look at it, to buy it. And when the deal sold and closed, he never has been in the apartment. He's never even visited it. So you do have stories like that where people will buy, you know, 50, 60, 70, $100 million apartments, and they will never even go to inside the building, not even once. But on the other hand, you do have people who live there as their primary residence. So there's a mix, but there is that narrative as well of more of a pied-à-terre style. But look, I think we had a good conversation tonight. We did a deep dive into maybe some mispricings in the market in terms of both the residential and the commercial real estate side. We talked about this interesting kind of sector rotation that is going on in the market. Russell 2000 had a really good day, seems to be breaking out of a stage 1 base. Small caps had a really good day as well. Japan continues to be strong. India continues to be strong. And it's a risk-on environment, right? Cryptocurrencies are getting bid up. This is not bear market activity. That's kind of stuff that happens in bull markets. Also, a lot of these stocks that have been getting hit during earnings, the next 2 days, they're popping right back up. I kind of call that the basketball underwater theory. And that is very, very much bull market behavior. So we're going to be covering that in this week's Behind the Street newsletter. I'm going to send it out this Thursday. So if you want to subscribe to our free investing newsletter, go ahead and scan the QR code on your screen, punch in your email, and this Thursday you will be subscribed to our Substack. And we also have an interesting New York City property tour coming up on that as well. All right, everybody, I'm going to call it a night. I want to thank all of you for joining us tonight as we walk through New York City on this rainy day. I will see you all tomorrow live from New York City starting at 8:30. If you enjoyed the show, feel free to leave a like, subscribe, share the show and the newsletter with your friends, and we'll see you tomorrow. So Austin City Limits, Sunshine After Rain, Hang with Mark Mom, Hawaii, our newest moderator, Sabrina Fair, I appreciate it. Jeff, appreciate you as well. Simon Thomas, Tish TV, FredX, the one and only, Dave Atlas, Peter, JC, Raj Rupani, Zozo Bob. Who else we got? TK Porsche, Gadat Muhammad, Crypto Meme, Out and About, our good moderator from Canada, Mia, Muhammad again, Twiggy. All right, guys, take care. Abdullah, always a bull market somewhere. You just need to know where to look. See you tomorrow in New York. Take care. What am I going to eat, actually?